Well, this past fall, leaders of several NYSE-listed energy companies gathered at the 60th EEI Financial Conference in Florida. That includes Emera, whose shares are up by more than 30% just this year. Ashley Masternardi was on the ground and spoke with its chief executive, Scott Balfour, about what is driving the momentum. Let's take a look.
Emera owns and operates a number of electric and gas utilities. Most of our business is in the state of Florida. 70% of our business today is in the state of Florida, but we are headquartered in Halifax, Nova Scotia, and operate electric and gas utilities in Atlantic Canada, in the US, and the Caribbean.
And you recently released your Q3 earnings and 5-year capital plan. Can you share more about that?
Sure. Yes, we on Friday just passed, we released our third quarter with a 9% increase in earnings, really continuing some strong momentum that we've had for a number of quarters now. In fact, our adjusted earnings per share this year is up 40% year over year. We also rolled forward our 5-year capital plan that reflects $20 billion Canadian of capital to be spent over the next 5 years across our portfolio. That reflects a 7 to 8% average annual growth rate in our rate base over that period.
All right. And you're here at the EEI Financial Conference where investors are looking at the energy sector. Mm-hmm. What do you want them to know?
Really for us, I mean, this is a really exciting time in the sector and an exciting time for Emera. There is lots of opportunity for us to be continuing to invest, to grow as we continue to serve customers by investing in modernizing our infrastructure, investing in reliability, which is so important now, and investing to support the growth, particularly that we see in Florida. But importantly is to make sure that we're balancing that against the issue of customer affordability, which of course is particularly important at this time.
All right, and could you elaborate on that, this need to invest in infrastructure, but also keep rates affordable? How is Emera balancing that?
Yeah, it's a really good question, and it's such an important question for the sector. For us, our approach really has been through, as you say, balance. It's managing the pace of the capital that we invest, so that we're doing that at a pace that delivers the highest value for our customers, but at the same time, keeping a pace that doesn't sacrifice affordability. And so this 7 to 8% average rate base growth that we reference and as part of our capital plan really helps to manage and navigate that. But at the same time is making sure that we're as efficient as we possibly can be with our costs, adopting new technologies in order to be efficient with our costs as well. All an important aspect of making sure that we are managing that affordability challenge for our customers.
And you also talked about reliability. Mm-hmm. Can you define what reliability is and talk about how you are working to make sure that your services are reliable for customers?
Yeah, and it really even extends beyond reliability. You can talk about resiliency too. And so reliability really is about making sure that the energy that our customers are looking for is always available to them. And minimizing outages, minimizing those times whether it's because of severe weather or equipment failure that the energy isn't being provided. And so making investments to storm harden our system against more severe weather, making investments to modernize and upgrade our infrastructure to make sure that it is continually available for our customers. That's all part of the reliability. And then the resiliency is also making sure that when there is some kind of a storm damage, that we are there to be able to respond as quickly as possible to get the power back turned on for our customers. Such an important part of what we at Emera and all our utility peers do.
What's on the horizon for Emera?
Well, really, it's about keeping momentum. We're in a place where we've got some really good momentum right now in terms of continuing to deliver shareholder value for our customers, for our shareholders, continuing to deliver value for our customers, continuing to invest for the future in order to keep both those things on track. And we're in a really good spot and sort of continuing to, if I pardon a Canadian analogy, put pucks in the net, a hockey analogy, just continuing to deliver for our customers, deliver for our shareholders, continue to do what we say we're going to do, and build value for our shareholders over the long term.
Our thanks again to Emera CEO and President Scott Balfour, and of course, Ashley Masternardi for that interview.